Airbnb was perfect. They represented the true essence of the sharing economy. Travelers could connect with local hosts that would deliver a unique experience and rent a room or a whole house for the price of a hotel room. You could even find cool accommodations like castles and tree houses. But here we are today, with widespread reports of users and hosts exiting the platform due to higher fees, absurd rules, and overall poor quality. Meanwhile, Airbnb itself has turned a profit only once in the last 5 years. So, how did everything go wrong? In this video, we pinpoint exactly how Airbnb went from delivering authentic and charming travel experiences to becoming just another corporate cash grab that now seems like an inferior value versus hotels. Is the quote, Airbnbust era really upon us? Let's find out. Airbnb was launched in 2008 and started as a platform where private homeowners could advertise a spare room or their entire home to travelers looking for an alternative to the cookie-cutter hotel experience. It was a true disruption to the travel market and created a situation where everybody benefited. Vacationers were happy to score a better value than a hotel, and hosts were able to make some extra cash renting out their space. But fast forward to today, and you will find that many of the 7 million homes listed are now hosted by large property management companies that offer low-quality decor and limited charm overall. On top of that, the fees set by both Airbnb as well as the owners have reached dizzying new heights that make these rentals just as expensive as a traditional hotel stay. In 2022, their collective greed also helped to push daily rates up by 37% compared to just 3 years prior. In essence, Airbnb has become the exact thing they tried to disrupt. In fact, the only thing that Airbnb seems to have disrupted is the local communities that they operate in. The proliferation of Airbnb rentals in major cities across the globe have contributed to the ongoing affordable housing crisis. Independent studies from universities and economic think tanks have concluded that short-term Airbnbs have reduced the availability of long-term rentals, helping to push rent prices up anywhere from 10 to 50% higher. So, what is the root cause of all of these troubling issues for Airbnb? The company can believe all they want that they are a revolutionary model that is different from a traditional business. But at the end of the day, they are still just a business operating in a capitalistic economy. That is also true for their hosts. That means that growth and profits are the only two measures that are truly important. To achieve the growth, Airbnb has had to expand to every market across the globe, even if there are existing laws that make it difficult to operate there. Some cities, such as New York, Paris, and Barcelona, maintain strict laws that restrict short-term rentals. The company then has to spend money to lobby local governments to modify their regulations or pay fines if they violate the law. As each market gets saturated, growth has become more and more expensive to obtain, so now the company needs to focus on boosting their profits. So, how can they increase profits if fewer users and hosts are joining the platform? They have to raise the price on their existing customers. Airbnb takes a percentage from both hosts and guests. For hosts, they charge a 3% service fee of the value of the total booking. For guests, we looked back at Airbnb's service fees since 2008 and found that they have steadily increased from about 6% in the early days to what they advertise now as, quote, most guest service fees are under 14.2%. But a recent scan of several rentals found that the average service fee was actually closer to the 20 to 25% range. That is also before other fees that are set by the owners, such as cleaning fees, which usually account for 5 to 25% of the total bill, as well as a fee for additional guests, a security deposit, and of course taxes. Airbnb also cleverly hid these fees from travelers until it was time to check out, where it became normal to see your total cost double due to the excessive fees. It took until November of 2022 for them to announce a more transparent pricing system, where they now display the total cost up front. It is no surprise that these inflated fees have led to a reduced demand from consumers, which then means that both property owners and Airbnb itself make less money due to a lower number of bookings. As Airbnb has evolved from a unique sharing economy platform to a hardened multinational corporation, it has become an inferior product for virtually every party involved. Let's break down the problems that each group now faces. For travelers, the issues that Airbnbs pose have been growing for years. It starts with the unreasonable and inflexible rules that some hosts impose in their home. There have been numerous stories of guests who enter a rental filled with notes on what not to do. Here are some of the wildest rules we found when researching this story. Guests were not allowed to change the thermostat. There was a curfew for when travelers could come back home. Renters could not spray any perfume or cologne. Guests were forbidden to use the pool or hot tub despite having it listed in the ad. There are also many tales of the chores that owners expect renters to complete before checking out. It's one thing to ask guests to do the dishes or take out the trash, but it's another to ask them to vacuum the floors, wash the linens, steam the carpet, paint the walls, refinish the floors, and feed the neighbor's dog. Okay, some of those are exaggerations, but it is not too far off from some of the stories that we came across regarding a few crazy hosts. Essentially, they are charging renters for a cleaning service, but also expect them to perform that service as well. Also, all of these rules and chores are unregulated by Airbnb and are usually not listed in the description. It's not until the vacationers arrive that they realize these rules are in effect. On top of that, renters also face the issue of inconsistent quality among the homes they rent. Since many hosts are now large property companies, the houses exist solely to rent out as an Airbnb, and therefore lack the coziness and quality that come with someone's actual home. That means they could be hastily filled with cheap furniture and could be missing amenities like a coffee maker or an iron. There are also stories about bug infestations, as well as hidden cameras that continue to make the headlines. At this point, it is getting quite difficult to justify an Airbnb over a hotel. After all, at a hotel, you get a reception desk with a concierge in case you have a question, as well as daily professional cleaning, a place to hold your luggage, and usually a free breakfast. You also receive consistent quality along with no hidden fees, and loyal members might even get a free room upgrade. Guests aren't the only ones facing issues with Airbnb lately. Hosts are also up against more and more problems that are only becoming apparent now that demand is tapering off. The issues that many property owners face began with their intentions. Since many heard through Facebook groups and self-help gurus about getting rich through Airbnb, they figured it was easy money. You can buy a property with just 5 or 10% down along with a low interest rate, then charge $100 a night for 30 nights a month. That could be $3,000 a month, which would more than cover your mortgage and maintenance costs. That would also be more than you could collect from a long-term renter. However, we suspect that many of these owners failed to truly validate the demand in their neighborhood before starting. When it comes to Airbnbs, there are no barriers to entry in any given market, so they are subject to being oversupplied. Meanwhile, hotels employ dedicated teams to perform market research to determine the ideal locations to open based on economic data and trend forecasts. Many small-time Airbnb owners want to run their rental like a business, but have not done the due diligence like a business, and now find themselves in an oversaturated market. They also don't realize that hotels have found other ways to make money from their customers, such as through room service, an on-site restaurant and bar, spa treatments, and offering paid room upgrades. Instead, Airbnb owners rely almost exclusively on having a sustained demand to maintain their profits. But if there is ever a downturn in the popularity of the platform due to, say, rising fees, then customers will abandon the model, which would then deliver a significant blow to the economics of the owners and expose the unsustainable nature of their approach. That is exactly what is transpiring now, as there are Facebook groups full of owners reporting that rentals have dropped to almost nothing recently. Yet, these owners still need to pay their mortgage. If they didn't lock in a low interest rate, then rising rates will cause their monthly payments to also go up. On top of that, property values are beginning to come back to earth, so they might even be in for a loss if they bought at the top of the market. So, Airbnb owners now face lower demand, partly due to their greed and possibly due to a lack of market research, but may also need to pay a higher monthly mortgage and cannot sell their home due to a softening market. That is causing many owners to leave the site completely and turn to long-term rentals, or worse, bankruptcy. At its core, Airbnb is just a technology platform that serves as a middleman to connect travelers and hosts for a fee. This model has led to multi-billions in revenues over the last few years. In fact, Airbnb now brings in more revenue than the Hyatt and Intercontinental Group combined. Yet, Airbnb has lost money every year from 2017 to 2021, only booking its first profitable year in 2022. You would think that a company that doesn't own any rooms and just needs to run a booking software could be immensely profitable. So, how have they managed to lose so much money? Well, first, their technology is quite expensive to maintain. They operate in 220 countries and support over 100 languages and over 30 currencies. Airbnb also spends tons of money on advertising. They need to constantly promote their brand against hotel options, but also against aggregators like Booking.com. In 2022 alone, the company spent $1.5 billion on sales and marketing costs. They also spend millions on lobbying, as well as on rectifying customer and owner issues when things go wrong. In 2020, Airbnb filed an initial public offering to sell their stock, but company executives actually admitted that they may never even be profitable. They've proven otherwise for at least 1 year, but with the way demand is going now, Airbnb's profitability may not last long. While it looks like a dire set of circumstances, we think that Airbnb can be saved. Our advice would be to immediately reduce their fees. That means to lower the service fees they charge to customers, as well as putting stricter guidelines on the cleaning fees and other administrative charges that are currently up to the owners. You may argue that those fees are what the company needs to stay afloat, but we say that lower revenues now to help bring back users is a better strategy than having zero revenues if you alienate all of your customers and then go out of business. We would then continue to maintain the marketing spend for the short term and use the funds to advertise these new, lower fees. When demand levels return, we would then lower marketing costs to a minimum and focus mostly on paid ads on travel sites, as opposed to general brand awareness campaigns, since we believe that most people recognize the Airbnb brand by now. Then, we would expect the company to be able to sustain a profit for more years to come. What do you think about this approach? Let us know down below, and please subscribe if you would like to watch more stories just like this. As always, thanks for watching.